let's get to Abigail Doolittle, who is here with Charting Futures. And Abigail, you're taking a look at the record highs for the S&P 500.
You're right about that, Scarlett. Lots of record highs on the day. Let's put the S&P 500's record highs today, the first since late July, on a number of factors: trade, earnings, the Fed, into the context of the year. There is the year-to-date gain for the S&P 500 E-mini futures, up 21%, right now on pace for the best year since 2013. Interestingly, though, we also have haven assets. Stocks, of course, are growthier risk-on assets, but we have haven treasury notes up 5.2% on the year. We also have gold higher. So mixed messages here as investors are seeking both growth and safety. It's going to be interesting to see how all of this shakes out. Now, that degree of uncertainty is reflected in this chart that we've been watching for quite some time, although right now it's trying to turn bullish. This is typically a bearish pattern because it's a huge range. It tells you about the uncertainty between the bulls and the bears, a big battle between those buyers and sellers, telling us that nobody knows. This last pattern that we were highlighting in orange, a broadening formation within a broadening formation, typically is bearish, and it looked like it was going to take the S&P 500 back down toward last year's lows. But right now we have that pattern morphing into what's called a symmetrical triangle, which is on these record highs, breaking out to the upside, suggesting this entire range could perhaps break out to the upside. Something to note about these patterns: prior to Fed accommodation, 9 times out of 10 they were bearish. Since Fed accommodation, 10 out of 10 times, I don't know if there's been that many of them, but 100% of them have actually turned bullish. So the Fed having some influence there. To talk more about what could be next to the S&P 500, especially the E-mini futures, I'd like to bring back Greg Calderone, Bloomberg News. Thank you so much for joining us. And the last time you joined, you didn't know what way that range was going to go, similar to most guests and experts.
Sure. So what we've seen, obviously, since I believe it was just about 2 weeks ago, we saw a little bit of a breakout from that pattern. We talked about the July high in S&P 500 being 30.27. We kind of touched there briefly on Friday, and then we were able to kind of break above that this morning after some good news over the weekend. So
let's put that into the context of a chart that you brought. Actually, it's an updated version of the chart we used last time. Last time we were in that range. Now we are breaking right above it. And talk to us about, do you think that this breakout is sustainable?
Personally, I do think the breakout is somewhat sustainable. If you see that number in red over there, the 28.79, that's the 200-day moving average. That's actually moved up from 28.50 a couple of weeks ago, October 11th, when we were here and on the same segment. So as that kind of base has been forming and rising steadily as the markets as we got into earnings season and various other geopolitical news that's been favorable, market was able to kind of put in new highs, and it looks like we may hold there at least through the next couple of days. Yeah, that rising 200-day moving average certainly suggests that the buyers are trying to take control, although it sounds like your level of conviction is somewhere in between. Let's take a look at some option strategies in terms of, how you could play both sides of the market, given the fact that there is some uncertainty here. Sure. Well, this is kind of a recap or an adjustment of the trade a few weeks ago, just kind of bringing the levels up a little bit higher than where we were. It turns out it wound up being a pretty profitable trade. And this is JP Morgan. And it's somebody at JP Morgan, one of the strategists, that had actually called for if we were to break out of that 30.27 range or upside resistance, we could see a move to 30.50, 30.70 on the S&P 500. We do have a fair amount of data out later this week. We really have a heavy week of earnings. Certainly, the FOMC on Wednesday and the non-farm payrolls on Friday. So much for stock investors to contend with.